Hey, this is Tom Kalagher with Fairhope Mortgage, and I'm here today with my good friend, Hill Robinson with Southern Coastal Insurance.
Hey, Tom.
Hey, thanks for coming. I wanted to talk to you about how people get insurance and what that process looks like. I get them pre-approved, they get under contract, and then I tell them to go out and find an insurance quote.
The next thing.
And a lot of people have questions about how to compare two policies. So let me know what that entails.
Well, we start, we have what we call an intake sheet. We take all the information when the client contacts us, the year of the home built, the roof style, whether it's a hip or gable roof, how old the roof is. That's a big consideration when you come to compiling rates. That's a big discount for a newer roof. But we gather all the information from the buyer, whether or not they have dogs. Why would a dog make a difference? Well, if you have a pit bull or a Rottweiler, it's going to be a lot harder to get insurance. That's a hurdle you really don't need to be adding on to what we have going on down here already, because we're in a place with high rates. We're a coastal county. So hurricane insurance is a must, and those rates are higher now. Unfortunately, we're in a little higher rate cycle than we're used to. 10, 11 years ago, we were in a seller's market where the insurance companies held the power, and that's kind of the way it is right now. Rates are on the increase, underwriting has gotten a lot tougher, so insurance is less affordable now than it was just 6 or 8 months ago.
So tell me a little bit about hurricane insurance, because I moved here about 5 years ago from Connecticut. I had never had hurricane insurance before. If we had a windstorm or a tornado, it was covered by our regular policy. We did get hurricanes, but they were a fraction of what this is here.
Well, every homeowner's policy, it's a typical policy type called an HO3. They all have wind insurance included, but in Connecticut, you didn't have a separate deductible for your policy. So if you had a $1,000 deductible on a hurricane hit, you paid $1,000. Down here, you have a percent deductible. In most cases, there are 1 or 2 cases where we have companies that we can write a regular peril deductible, but the rate's higher. Typically, you're going to have a 2% deductible for either wind and hail perils, or you may find a company that just applies that percent deductible to a hurricane loss only. So if it's a tropical storm or a December thunderstorm, that percent deductible doesn't apply if you have a hurricane deductible on your policy. If you have a wind and hail deductible on your policy, it's going to apply for any wind or hail related claim, whether it's a hurricane in July or a December tornado.
So 2% means 2% of the value of the home?
2% of the value of the home coverage. So if you buy a home and you've got a policy that says $400,000 on it, you've got an $8,000 deductible for wind and hail or hurricane, depending on which policy you buy.
So that's a big deductible that people have to be prepared for.
Yeah.
Because I've seen policies that have 5 or 6% deductibles.
Oh yeah.
And 5 or 6% of $400,000 is a big chunk of money.
$20,000.
Yeah.
Yeah. Now, your lender, 6%. I've never seen. Companies do either typically 1, 2, 3, and 5. Okay. Now, I don't think lending requirements allow you to have more than a 5%, but that's more of in your wheelhouse. But 5% is large, and if you have a $400,000 house, like I said, that's a big deductible.
Yeah.
So
absolutely. Mm-hmm. When somebody gets quotes from multiple insurance companies, how do they compare the two? What line items do they want to look at?
Well, there's a lot hidden in the details. You have a list of endorsements typically on each quote, and you really need to pay attention to those endorsements. And I'll give you a common endorsement that most agents don't sell, and most people don't realize it's out there. And that's called an extended dwelling replacement cost endorsement. And that's very, very big. Out of this agency, we sell it 90% of the time. There may be a company that we have that doesn't offer that, but what that endorsement does, and you have to understand, when a client calls in, we're getting their square footage, and you've got different types of building grades in a house. You've got a builder's grade home, which may be not for mica countertops because those aren't made anymore, but it could be solid surface countertops. But most of the homes around here are built with granite countertops or better, quartz, etc. So the more high-end finish your home has, the higher your replacement cost is going to be. And there is a model that we use based on zip code that we put those factors in, and it gives us a minimum estimated replacement cost. That's minimum, okay? Right now, building costs are out of sight. and it's been fluctuating greatly. Lumber prices are down one week, they're up the next. So we never really know what it's going to take to rebuild a home, right?
Right.
Well, this endorsement is called an extended replacement cost endorsement, and it's typically between $25 and $55 or $60 a year on your annual policy. And that will take that dwelling coverage, and let's say the house minimum estimated replacement cost was $400,000. It'll take it up 25%. So 400,000 times 1.25, you get your new number. If the house is laying there in a heap of ashes, or if it's blown down in a tornado or a hurricane, and there's 3 people out there giving estimates on rebuilding, and they're like, gosh, Mr. Smith, you only have $400,000 in coverage on your home. You don't have enough to rebuild.
Yeah.
Well, you add that endorsement to it and say the estimate was $485, Mr. Smith has the coverage. That's a very important endorsement that you should have in your policy.
That sounds like cheap extra coverage to make sure that you're covered.
Very cheap extra coverage. 25% is a lot.
Yeah.
So
now, tell me about gold fortified homes, because that was new to me when I moved down here too.
Right. Alabama leads the United States, or Baldwin County leads the United States in fortified home building. A lot of people don't realize that. We got on this early. Fortified building is a building process. Gold will tie the home, the walls, the roof, all into the slab. So when they lay that foundation, they put bolts into the slab, and your walls are tied into the slab, and then your roof is tied into the walls, and that gives you a much cheaper premium on your homeowner's policy. Most municipalities in Baldwin County, with the exception of a few up in the northern part of the county, require a home to be built to gold standards. But that doesn't mean you get the discount on insurance. You have to have a certificate, meaning you have to hire an engineer in the building process to give you that certificate, kind of like Willy Wonka's ticket to get into the factory. You got to have that piece of paper that says this is a gold fortified home, or a silver fortified home, or a bronze fortified roof, in order to get that discount from the insurance company. And a gold discount is a very large discount. It may take a new policy from $1,800 down to $1,100 or $1,200.
That's a big discount right there.
Yeah, and that discount lasts for 5 or 6 years until the fortified certificate expires, and you have to apply for a new one, which is a couple $100.
So I'm coming up on that 5-year range right now.
Yeah.
So that's a great question to ask. So as we get to 5 years old on the home, I have to call a
fortified evaluator.
A fortified evaluator to come out and inspect it.
I'm not sure of that process. It may just be a rubber stamp, but really what they want to make sure is that you didn't add square footage to your house.
Okay.
But around here, like I said, when you apply for a building permit, it's the county or the city is going to make you build to that fortified standard anyway. So a lot of times they'll kind of rubber stamp your reapplication.
Yeah.
But it depends.
So it's going to cost you a couple $100 for that, and it's going to save you maybe $7,000 or $8,000, or $700 or $800. I'm sorry.
Right, hundreds of dollars on your homeowner's insurance.
Yeah.
It's also a great tool for resale.
Yes.
Yeah. So if you decide to sell your house, somebody's going to ask you if you have that certificate, and if you do, cha-ching.
As a mortgage lender, sometimes I run into issues where I've pre-approved somebody for a home loan, and then something changes. Maybe their interest rate's a little higher, or maybe the insurance came in a little higher than we were expecting. What are some of the things people can do to reduce that cost to make sure that we meet the debt to income requirements and get closed on their loan?
We're running into that problem a little bit more now than we have been historically, because rates are on the rise. We don't ever recommend you do this, but in order to close your house, it's something you can do. You might want to reduce your contents coverage from what's typical 40 to 50% of your dwelling coverage. You might want to reduce that to 20% to close. You might want to consider raising your deductible from $1,000 to $2,500, or from $1,000 to $5,000. You may want to raise your wind or hurricane deductible from 2% to 3% to 5%. All of those will, eat away at that overall premium and bring it down to where you can qualify under your standards.
Okay.
And move forward with closing. And then once you close, call your agent, say, look, we're done now. Tom's kind of out of the way. Let's raise our contents coverage, because that then gets billed to the customer and you're not affected.
Yes.
The loan's closed.
Yep. Once it's closed, you can change the coverage however you want.
That's
Absolutely.
exactly right.
Well, as long as they maintain a certain level of coverage. They can't.
Absolutely. You can't gut your dwelling coverage, because that's not allowable.
What about bundling with your
Great
home
idea.
and other types of insurance? Can that help save you money too?
Absolutely. Here we write auto insurance, flood insurance, umbrella policies. Anything you can add to your homeowner's policy, bundling, always discounts the premium further. Sometimes 5%, sometimes 10%, sometimes a little bit more, depending on the company.
Oh, that's great.
We've got 15 carriers here, so we've got a lot of options.
All right, so when you do a quote for somebody, you don't just give them the quote you have.
No.
You're searching
I'm busy.
15 different agencies for the best coverage for that.
Maybe not all 15. I can determine right away. You know, if you don't have $1 million house, I can scratch out one. If you don't have a newer roof, I can scratch out 2 more. But typically we do 6 to 8 quotes per home.
Okay.
You know, my partner Steven and I have been at this for about 30 years. I've been in it for 32, him about 25. We kind of know the market, so it makes it a little bit easier for us to narrow it down.
But you can find the best option for them.
Absolutely.
And then you're bringing that
Yep.
as the best option.
That's right.
Okay.
Yeah.
Great.
And we may send you 1 or 2 or 3 options, but typically it's 1.
Okay.
Yeah. Oh, and also I want to mention the buyer needs to know whether they're buying an admitted policy or a surplus lines policy, because a lot of surplus lines policies are written in this market, and a surplus lines policy isn't necessarily bad. That doesn't mean they have a smaller financial ability to pay your claim. It just means that if you have a problem with your claim, you have to fight that out with the insurance company, not the state of Alabama's protection by the guarantee fund the state provides for admitted carriers. In other words, you've got companies like State Farm, Farmers, Alpha, Allstate. Those are all big name admitted carriers. You've got companies like Sure and Safeport and Heritage, who are some of the smaller admitted carriers. But as long as they're admitted, that gives you, the buyer, a little extra protection in the event of a company going insolvent. And we've had one of those recently in the marketplace. And those people that are having claims with that company are now being turned over to the state to handle that claim. Whereas if it were a surplus lines company, they're kind of out of luck.
So if it's an admitted company and they go out of business, they're still covered by the state.
Yeah, there's a guarantee fund the state provides to make the insured whole.
Okay.
Yeah.
And I'm assuming that there's a lot of risk with an insurance company going insolvent if a big storm comes through.
Absolutely. Yeah, that just happened last week in Florida.
Yeah. Okay.
Federated National. If you've got a federated policy, you're typically going to have it rewritten by another admitted carrier, so you should be fine. But if you have any questions about that, you can call us, because we do write federated, or did write federated.
I think I have a question about that later on.
All right. Yeah. Do you have a federated policy?
I did at one point. I don't know if I do now, so we'll need to talk.
Yeah. Well, I think if you did, you probably would have received.
I would have heard already.
Yeah. You would have received some email from our broker, Sure.
Okay.
Who facilitates all that. So.
Okay, then maybe I don't now.
They've done a great job taking care of those customers.
Good. Oh, that's good to hear.
Yeah.
That's good to hear.
Mm-hmm.
And then last, let's talk briefly about other things that can be covered by your homeowner's insurance. So you could cover things like engagement rings.
Yeah, absolutely.
Fences.
Swimming pools, fences, guest houses, equipment sheds. Those are what you call separate structures, or other structures may be on your policy. You can set that limit however you want to. We offer 0%, 2%, 5%, 20%, and however much you want, you can find.
Okay.
On your jewelry, jewelry is always covered in a homeowner's policy, but you do have it limited for theft. Jewelry first, silver, guns. However, you can add what's called a floater, or schedule that piece of jewelry for an extra premium. And you've got a $50,000 or $60,000 diamond ring on somebody's policy. They're paying a good bit for that, but it's available. If they lose it while they're snow skiing in Vail, and they get to the bottom of the slope and they realize that big diamond's gone, they give me a call and we're going to provide them a new diamond.
Wow.
But that's not a regular part of your homeowner's policy.
Yeah, you've got to add that on. You've got to think ahead to add that on.
That is correct. Yeah.
Okay. Now you mentioned roof condition a number of times.
Yeah.
And I find that a lot of people buy a home with the intention of fixing it up. So so say they buy a home and the roof, has been on there 15, 20 years.
Yeah.
And on their list of things to do in that first year of homeownership is replace the roof. You're saying they should call you as soon as they do that.
Roofs are a big deal with insurance companies right now, a very big deal. More companies are realizing that if you buy a house with a 25-year roof or a 30-year roof, that roof's not going to last as long as it was made to be, because we're in a climate down here where they're just not built to last. But getting back to your question, if you've got a deal on a house and they're calling me for insurance and I can't insure it because the roof needs replaced, I'm going to give them about 30 days. Now, they can close on the home, I'm gonna bind the policy, but that roofer needs to be out there the minute they close, because obviously they can't put a roof on a house they don't own yet, right?
Right.
So, they'll have about 30 days to get that roof in order, or they're gonna receive a cancellation notice for bad roof condition. And what we look for with roof condition is what we call curling. That's where the shingles kind of curl up on the ends. Granular loss, if you've got gutters, or even if you don't have gutters, look around the edge of your house or look at the gutter downspout. If you've got roof granules, that's a sure sign that your roof is worn, and you're probably going to need it replaced. Typically, we can insure metal roofs without any problem up to about 25 years old. Some companies will not offer replacement cost on roofs if they're over 10 years old. Some will. But whenever we look at a house, our first question is, how's that roof look?
And I think we worked on one too where there was a tree overhanging a roof that caused some problems, and
overhanging limbs are an issue.
Taking something like that down and getting it out of the way can improve their costs too, right?
When you buy a house in this marketplace, it's not like buying in Birmingham or Shreveport, Louisiana, or Connecticut. Those companies aren't really concerned about overhanging limbs or limbs encroaching on the roof from the ground, like maybe a crepe myrtle.
Yeah.
That's that limb because when that tree shakes in a windstorm, it's raking that shingle.
Okay.
If a windstorm crashes a limb down on your roof, it's likely going to punch a hole in it. So more companies are wanting you to trim those limbs either a distance above the roof or out from over the roof entirely, or away from the home.
Okay.
So when you're looking at a house, that's kind of what you need to look for, and say, okay, I like this house, I love this house, but when I get in it, this is what I need to do right away. Typically, the insurance company is going to inspect that house within the first week or two of you owning it, and then they're going to get that inspection report back to the insurance company. Somebody there is going to review it, and they're going to send us a little nastygram saying, hey, we've got problems here and here and here. We'll give you time to resolve that, and then I contact the customer. They have to find their landscaper or tree surgeon or put a fence around a swimming pool or whatever it is in a certain amount of time to keep that policy.
Okay.
Yeah.
All right.
Sure.
And then let's say a hurricane does blow through. What's the first thing that somebody should do if they had some damage to their house?
Try contacting your agent. Every company has an 800 number or website you can go to, but it's always good to contact your agent, and here's the reason why. Let's say your fence is blown down and you've got a $6,000 repair roughly. You don't know that yet because you haven't gotten an estimate. That's kind of what I'm here to tell you. But you've got a $20,000 deductible.
Yeah.
There's really no point in turning in a claim to the insurance company if you're not going to have a claim, right?
Yep.
So always call your agent and get some advice, whether it pertains to a car policy or a home policy or anything. It's always good to talk to your agent and see what you can do to turn that claim in or not turn that claim in.
All right.
Yeah.
Sounds good. Well, thanks for letting me stop by and talk to you about it. I appreciate it.
Absolutely, Tom. Always good
always
dealing
nice
with
working with you. Yeah.
Thank you very much.
All right, and I'll put Hill's contact information in the comments in case you need to reach out for any questions about insurance too.
Thank you.